Well, you spoke on 3 separate occasions yesterday, and the sense I got from what you were saying is that you feel that even as much potential as there is in gold, that really silver has, on a percentage basis, even much more potential than gold to rise. Would that be an accurate summation of your view?
Yeah, and people that really love gold, I'd just like to say, if you want 6 times more gold than you can afford at a minimum, buy silver. It's probably going to outperform gold by at least 6 times. Right now, the gold-silver ratio, we're at silver's price is 1/60th or less. 1/60th to 1/65th is where we've been hanging out at of gold's price, and it is very logical for it to go to probably 10 to 1, but 15 to 1 is like a no-brainer. It went to 16 to 1 back in 1980 when gold peaked. Silver blew its doors off on a percentage basis. Silver had been at about 50 to 1, and it rose to 16 to 1. This time, I think we're going to go from 60 to 1 to 10 1, 8 1, maybe less, maybe 1/5 of gold's price, because this time silver is a lot more rare. And as the public rushes back into gold and silver, whatever is going into a bubble becomes all the news. If you remember back during the NASDAQ bubble, if you had turned on the news on the television, the only thing you could hear on a financial channel was .com and tech, And then we went into a real estate bubble in 2007. You turn on the same financial channel that was all .com and tech then, and suddenly it's all real estate now. Gold and silver are destined to be the next great bubble. This is just destiny. Right now, see, nobody's been punished on gold and silver for 30 years. The public rushed in and they bought at the top. My dad bought gold at around $800 an ounce or something, and so did all the friends of my parents. They all bought gold at the wrong time. They rushed in just like most of the public did. It was the professionals that got in early that made the money on gold in that last bull market. But when it goes into these bubbles, it becomes all the financial news. Nobody has been punished on it for 30 years, so their memory just doesn't go back that far. They just got punished twice on stocks, in 2000 and in 2008. They had suffered massive losses. They got punished in 2007 and 2008 on real estate. People that were flipping hard, all these people that thought they were financial geniuses suddenly found out that they were financial morons. They were just riding a wave, and they didn't have the smarts to get off of that wave before it broke. And so when it becomes all the financial news, there's going to be people like Dave Morgan and myself and other people on the news showing charts and telling everybody that this time around there's more gold for investors to buy than there is silver. Silver is significantly more rare than gold. What do you think is going to happen to the price then? I think it's just going to be explosive. So if you want more gold than you can afford, buy silver now, trade it for gold later. Watch the gold-silver ratio.
Well, the Chinese like to say, Mike, that they wish us to live in interesting times. And I think the way things are going globally, all of us, regardless of what country we live in, are going to be in interesting times. And if you want to have a chance to protect some of your wealth and ride that wave, I think
increase your wealth.
Increase the wealth.
A lot of people say it's protection, and it's more than that. In fact, did you know that in order for the stock market to have returned the same amount as gold has since it became free trading in 1971, the Dow would have to be at 29,000 points right now. The stock market has significantly underperformed gold since gold became free trading. And when you go on to when somebody's interviewing me on a TV channel or something, and it's a stock guy, he'll always pick like 1980. Well, gold was in a bear market for 20 years, and you talk with financial planners, and they say, well, you should put 10% gold in your portfolio as a hedge. They developed that in the 80s. The brokerage houses and people that were giving financial guidance, because they didn't have these certified financial planners back then, I don't think, that they've got today everywhere you look. But back in the bull market of the 70s, none of them were telling you to put 10% in your portfolio when it was performing. It's just that the public always chases yesterday's news, and so after the peak, when it's declining, they're telling people that gold is dangerous, just put 10% in, and it's because the public is demanding that their broker put them in some gold. They want some gold, and they're telling them just 10% because they can't make any money on the gold. They're not making a commission on that. They're making commission on the stocks that they're selling in. Right. But you know, gold stocks can all go to zero, every one of them. Gold has never gone to zero. It can't go to zero. Silver is more undervalued than gold right now. Silver is, you know, Dave Morgan and I were just talking, and silver basically, he could only name 2 primary silver producers that show a profit. All of the others are operating at a loss year after year after year. That means that, you know, I don't care what their cash cost is on this mine or that mine, because they all give you these flowery prospectuses that make it sound like you're going to make a ton of money if you buy their stock. Mm-hmm. And I believe buying their stocks is probably a good move because silver is basically undervalued. But did they show a profit at the end of the year? No. That means that silver is below mining costs right now. When the vast majority of silver producers can't dig it up and sell it at a profit, it's below mining costs. Well, that's a safety net. You can't have a commodity that the world is running out of that is vital like silver, because modern life can't exist without silver. If you got rid of all the silver today, we'd be back in the Stone Age. Right. So you've got a safety net underneath your investment with this huge upside potential, and if you're just willing to wait, there's almost, in my mind, I can't guarantee it for anybody, but for me, what I feel is I went 100% into this, but it's got this safety net under it. If you're willing to wait, it has to go up, in my opinion. I don't give any financial advice to anybody. What I do is educate, and they can make up their own minds. But when I found out what was going on and what the fundamentals of gold and silver were, I went 100% into the metals. I have no other investment. And then I started a precious metals dealership, goldsilver.com. Then I wrote what is now the best-selling book on investing in precious metals, Rich Dad's Guide to Investing in Gold and Silver. And so there isn't anything I do. I wrap my entire life around it. So I haven't bet the farm on it, I've bet my life on it. And I'm confident that I'm not going to get, so far, it's been the most rewarding thing of my life.
Well, you certainly walk your talk, Mike, and watching the way the audience responded to you yesterday, I think you struck a real responsive chord with them. So I want to thank you for being on House Street and taking the time to talk to us, because I know the last couple of days have been draining for you, not to mention the 20-hour flight here from where you came from in North America. So thank you very much, and I wish you the very best going forward, and thank you for being on the show here for House Street. And
thank you.
This is David Smith, contributor to the House Street.